HIM stock is up 135% throughout the past 4 weeks. We can see that it's been quite a strange year. First, it started like up until late February, where the stock kind of put on all-time high at around 70 or 72 US dollar. Then, due to the discussions about the tariff discussions with United States, China, and the rest of the world, the stock tanked along the rest of the market. And again, after the easing of the tariffs a little bit over the past couple of weeks, the stock is now skyrocketing along the rest of the market. The big question for new investors is like, what is hims and hers? And you might have heard a lot about this company, and is it right time to invest in a company after it's up over 100% in just a couple of weeks, right? I mean, it's not the best time usually to invest in a company when it's up 100%, but I would argue that this is a special case, and I actually think this is at the very least the fair value of the company. Like the 20 or so US dollar was just absurd for a company that grows at this kind of rate. Now, I know that the PE ratio looks like very high, almost 100, 94 according to Yahoo Finance, but this is according to like the last year numbers. In fact, if you look forward, I mean, you're investing in stock that's growing very fast. How are they growing very fast? Well, the easiest way to look at it is looking at the subscriber base. Remember, this is a telehealth company, and they're thriving, and they're essentially doing great as a company due to the number of subscribers that keeps growing. And those subscribers keeps to put in revenue in the company through their medical services and drugs. So I marked the Q1 of 2025, which is the last earnings, in orange, so you can see it clearly. Then you can see that I'm expecting the company's subscriber number to increase quite substantially. This model is updated, so I reduced my expected numbers. Previously, this number was roughly 5 million by end of 2026. I would say that was a little bit unrealistic, so I've kind of taken in your comments in the comment section and updated that model. But looking at the actual revenue numbers based on those subscriber growths. So again, we can see that Q1 of 2025 came in at 586 million US dollar. And if you're new to this stock, one of the signature things about hims and hers is that they have an unusually high marketing expense. In fact, you can see that on the past quarter, it was 586 million revenue, and the marketing was 230 million of that. How much is it in terms of percentages? Well, we can see here that the marketing is actually 39.5% of their revenue, which is kind of insane, and that's still much lower than what it used to be, a couple of years ago, which is what essentially half of the revenue was going to marketing. Like in Q1 of 2023, 51% was the ratio of marketing divided by revenue. Now we are down to just below 40%, and this is probably the scaling of the company, which will, according to my model, we will see that by early 2027, we would be probably closer to 38%, potentially even better. But let's slow down a little bit. Let's look at the expected numbers, right? So one of the more important numbers for me is that obviously the revenue, the top line, but going then to the operating expenses, you can see that I foresee the operating expenses of this company to increase in the up and coming year or year and a half from the 372 million right now to maybe 550 million by late next year. But then the revenue is also increasing in the same time frame. So looking at the more important number there, the net income, right? So you have the revenue, you have the operating expenses, and now let's look at the net income. I would say that the net income of hims and hers in Q4 of next year should be closer to 120 to 150 million US dollar on a single quarter basis. How much is that? Well, currently they just reported the numbers, and the net income was just below 50 million US dollar. So you're telling me they're potentially at the very, very least more than doubling and potentially tripling their net income in a year or maybe 6 months, not even 18 months, maybe 12 to 15 months. They're gonna double to triple their net income. That is why I would say that this company is very cheap. Based on my estimations of net income of 150 million or so in Q4 of 2026, that's our earnings per share of around 60 cents per quarter. That's essentially a run rate of 2 to 3 US dollar of earnings per share in a single quarter. 2 to 3 US dollar of earnings per share for next year, right? So what is the stock price currently? 64 US dollars. So what is 64 divided by 2 or 3? That's anywhere between 20 and 30 PE ratio. So that's why I'm telling you that don't look at Yahoo Finance for the extreme growth stocks like hims and hers, growing their subscribers, as I've been showing you, both historically. In Q1 of 2021, they were less than 2 million. and now they're closer to 2.5 million in essentially 1 year's time frame. But not only are they growing their subscribers, they're also obviously growing like their revenue. They're becoming more efficient. How much more efficient? Well, I think this graph here shows it much better. So you can see that starting from Q1 of 2023 on the left, we have two bars for each time frame. The single bar is the total operating expenditure, and the colored ones are essentially, the technology development segment, the operation and support, the marketing, and general and administrative. Combined, they make the total operating expenditure. And you can see that the bars are becoming smaller and smaller for every single quarter. And the orange one is, again, my expectations for Q2 of 2025. And we can see that this one here, Q1 of 2025, was the one that they just reported, which we saw a huge improvement in total operating expenditure as relation to hims and hers total company revenue. And I would say that it's potential that I'm way too conservative now, since the Q1 numbers were so great. But I told myself, let's be a little bit cautious, let's model with conservatism, and hopefully we get a good surprise. I mean, I wouldn't be at all by any means surprised if these numbers that I now have from Q1 and onwards and Q2 and onwards are a little bit too much. So in actual real case scenario, things are looking even better. So they're increasing their number of subscribers. They're increasing the profitability. They're getting good scaling of this, and they are still a small company, I would say. The valuation is fairly low. I mean, sure, is the valuation low currently? I would say it's closer to fair value right now. But I mean, just a couple of weeks ago, you could buy this company for 20 to 25 US dollar, right? At that time, I think hims and hers was an absolute bargain. Now, would I be surprised if the stock market continues to be in a good mood? Would that, if hims comes close to this all-time high of around 70, 72 US dollar, if there's a breakout, I mean, I'm not a technical analyst, but I would say that, if they break that 70 to 72 kind of level, there's going to be a lot of momentum in this stock. And again, look at the companies like Palantir, right? Let's look at Palantir. What are the fundamentals of Palantir? Because it's also another high growth stock, right? You can see that Palantir's PE ratio, obviously based on last year, is 556. They're 6 times more expensive than hims. So I'm not saying that hims is gonna have the same kind of PE ratio and valuation as Palantir, which is working within a complete different segment and industry. But comparing to a lot of other companies on this kind of market currently, I wouldn't say that hims and hers is at all expensive. So my summary of this video is that, again, this company is growing very fast and the fundamentals are looking great. You can also see that stock-based compensation is quite realistic in my opinion. It's gonna go from being around 7 and 7.5% to 8% a couple of years ago. And now it's gonna be, by the end of maybe next year, it's gonna be closer to 4.5 to maybe even less than 4, potentially 3.7% of their revenue. So this company is becoming more efficient in every single way. I mean, then we have also their own kind of discussions about having a revenue of at least 6.5 billion in 2030, 4.5 years from now, adjusted EBITDA of at least 1.3 billion on a single year. And I would say that they are usually very conservative. So would I be surprised, this company that keeps improving, keeps adding different services to their kind of total company solutions, is it out of the realm of reality that this company is going to continue to grow substantially in the up and coming 4 or 5 years? Not at all, I would say. You can see here on this graph that they show in their investor deck 2020 and 2021 and so on and onwards. And they add they started with dermatology for men and sexual health, and then they add the same dermatology for women's. Then they add mental health, then weight loss in 2023 and 2024. Then they're going to add a couple of other stuff now also in 2025 and probably even more next year. There are also the potential of, expanding globally, which they actually mentioned in the last earnings. So no matter how you look at this, I think this company is very cheap. And finally, again, remember that I told you there is one signature thing about this kind of company is that their marketing expense is quite substantial as percentage of their revenue. If this company scales and they become the Netflix of, telehealth, they have a huge opportunity to just essentially use their name recognition like Netflix does and cut down on the marketing substantially. I mean, they could easily, like by Q4 of next year, I have the marketing at 377 million. They could probably at least add a couple of, tens of millions, like maybe save like the marketing from 377 to 347, and those additional 30 million could probably end up on the net income, essentially all of it. And that's gonna push us close to 200 million or so net income on a quarterly basis. That's why I think that this company is, in my opinion, at the very least in fair value. And if the market continues to be continuing to be in a good mood, I wouldn't at all be surprised if this company breaks the all-time highs and maybe even pushes $100. Now, traditionally, if you follow me, you know that I don't like to hype the companies. I don't like to be a hype kind of YouTuber, but in my opinion, this is one of the cases that things are like the reality out there for hims and hers is just looking too good, in my opinion. So anyways, I would really appreciate if you could subscribe and like the video, and also engage in the comment section. What are your ideas about hims and hers? Is everything as good as it potentially looks like on the paper? And yeah, would really appreciate if you could comment in the comment section. So thanks for your time, and see you in the next one.